Morning everyone, this is Rajendran here joining from Market Calls, and welcome everyone to weekend webinar on market profile. So we're going to look into possible top setups and possible bottom setups, both from a longer time frame, bigger perspective, and also from a very short term perspective. We're going to look into it, and before getting into the session, let's have a quick look on what happened in the markets and what are the key reference level to watch out for in the upcoming trading sessions. We have a little bit of quick outlook on Nifty and Bank Nifty, right? And then we look into what market could possibly do, right? So last Friday, I mean yesterday, we had an AB poor high, and then just shy of 2 ticks. These kinds of things in indices, it happens very rarely, and that is why it gives you a tremendous trading opportunity as well. So that AB poor high, if you are, it's an indication that it's an weaker hands are coming and shorting over there, and it's an emotional day as well. You can see a lot of anomalies coming on that particular day, more than 4 anomalies. It's a poor structure as well. It's a poor structure and a kind of a double distribution setup. Lately, a news-based sell-off is getting initiated over here. Some MSCI news announcement, and Z Limited got crashed, and Distribution got crashed some 37%, and Z crashed some 30% odd. So all these things are putting an downside pressure over there. But that also gives you a tremendous opportunity to fade everyone. You think about over here, that's an AB poor high over here. If it is a stock, right, generally it clears most of the time, 50% of the time it clears within 2 or 3 days. Or if it is stock, there are cases where, like we've seen in ICICI Bank, it went for closely a month, right? This AB poor low here, which happened sometime back in 4th of January. It has been went for almost 20 days, or probably 18 or 17 or 16 trading sessions. More than 16 trading sessions, it come to clear those reference. But when it is coming in indices, 90% of the time, this AB poor high gets cleared really faster. Maybe the very next day, maybe 1 or 2, 3 days, or maybe 3-4 days at the max, we can put it over there. So that is an interesting opportunity to look into the indices, because most of the time indices, it clears more faster than stocks. This I'm just talking from the last 4-5 years of experience by looking into the AB power low. AB power low clears much faster compared to any other poor highs or poor lows. Other poor highs or poor lows may clear or may not clear, but AB poor highs having a higher hit rate of coming and clearing faster. So maybe again, at the same time, if you look into the yesterday's low was 10,900. We talked about this, right? And there was unsecured low from the OFA, which also we talked about this. Now this unsecured, the AB poor high is now an unsecured high from the OFA, because high volume got transacted at that day's high. So from the auction perspective, it is not a completed auction. Price has to revisit back to clear the auction. So there's an unsecured high from the OFA again, and there is a AB poor high there. One more failed auction on the upper side, right? So on the downside, the unsecured high from the order flow, and the failed auction got cleared. The psychological reference got a clear. Absolutely, the price also broken down, multi-day high, I believe. It broken how many days? This low has been taken down. So previous week low has been taken down. I believe it's not a previous day low. I'm sorry, it's not a previous day low, but multi-day high has been broken down. But when multi-day high has been broken down lately, that is a sign of not a serious sell-off again. Like if it is a multi-day, I'll tell you how a multi-day high should be broken out. Whenever a multi-day high is broken out, it's something like the balance principle which we seen yesterday. Let's say that we have a multi-day high here, one of the lows, multi-day low, and price used to keep doing something. And when the price is coming and breaking multi-day low lately, lately the price is coming and breaking in the last half an hour or last 1 hour, but it was a tiny break, right? It's not a big break, but it's a tiny break. It usually have a tendency to mean revert back again, right? And otherwise, a good breakout will be something like this. A good breakout, it's something like which happened in Z limited, right? So when it's taking out multi-day breakout, there should be a strong force coming in, and you should be feel that force, right? So this is something like this is not a good multi-day breakout. This is not a good multi-day breakout. Most of such kind of multi-day breakouts mean reverts back in a very short term, right? I'm not talking about short term. I'm not talking from a long-term perspective. So this is one of the perspective we can think about it. So there are ways you need to classify which breakout is a strong breakout, which breakout is not at all a strong breakout. That you need to have a clear mindset over there. Let's say a 4-day balance is there. A 4-day balance is there. When these 4-day balance is clearly building a clear value area low, then it is a good breakout on the downside. Similarly, when the price is balancing, a lot of balancing activity happens, and lately price takes it down. Lately, this is a good breakout. This is a good breakout. What is a good breakout is what is not a good breakout is price trading inside the range, and all of a sudden it breaks. We've seen that it usually mean reverts back, right? It usually mean reverts back. Not a good breakout, and so one of the thing over a period of time you have to classify is as a short-term trader, which is a good breakout, which is not a good breakout. So if you know that thing, again, there are tremendous odds to capture those in a very short term. And that is an apart from that, we also have an momentum auction reversal. I guess you understand what is momentum auction reversal from an order flow perspective. I'm going to repeat that again. A momentum auction reversal is something like, I'm going to take a 30-minute chart. If you look at the 30-minute chart on last Friday, around 2:45, we have one of the bars, one of the 2:45 to 3:15 bar. So this is the bar here. It's one of the long volatility candle. That candle alone almost broken closely. Okay, let me go back here. Here is the candle. Almost it broken closely 60 points. The candle range is almost 60 points. It's a high volatility candle. And then the next bar, we got an inside bar. Right? So volumes are supporting closely. 21,000 contracts got traded, and the second one almost more than half of the volume got traded. It's an inside bar and a positive candle. It is a momentum auction reversal on a 30-minute time frame with a decent volume support. Right. So this is one of the places where you can think about initiating and long here. At least you should not be shorting here because it's too risky, because this could act like a positional support. So it could get invalidated only if this level is going to get broken. So the 10,761, right? So a momentum auction reversal we had seen multiple times. How it the one of the time we are seeing on a higher time frame, right? On a 30-minute time frame. This is one of the case. I also posted in Slack. I haven't posted the screenshot of it, but then I said like there is a momentum auction reversal on a 30-minute time frame. It's not a good breakout. Okay. That's a momentum auction reversal on a 30-minute time frame. Auction is risky to continue shorts here. Odds of reversal back to testing today's high. Why today's high? Because today's high, that is Friday's high, is an AB power high plus an unsecure high from an order flow perspective. So in a short term, 10,761, that is Friday's low, is an important reference. We have all the odds of bouncing back. So this I posted around 3:18 p.m. By that time, I was seeing that the positive inside bar was getting developed, right? So, and it ended up like a positive inside bar. In fact, it ended up with a positive inside bar with a decent range and decent volume. So means a lot of absorption happens over here. What is an absorption? Despite the sellers showing their strength, the buyers will be coming in absorbing all the sellers' aggressiveness. Sellers are keep on selling and selling and selling, but buyers on the other side, they used to absorb all the shocks. They act like a shock absorbers. So even though it was a sharp downside, right? The entire, it is like they are catching the falling knife. Somebody is catching the falling knife, and they could be a strong player, and they could be a strong player here. That is what the absorption usually means. A strong sell-off is completely absorbed. That is why some day back somebody asked, despite the strong sell-off, how the market is keep going up. Right? That is the question they asked, because the entire sell-off has been absorbed by the buyers on the counterparty side. That is why, despite all the sell-off which is happening, strong sell-off which is happening, market tend to go on the reverse side. That is mostly because of the absorption, right? Absorption of the entire supply, and then market tend to move on the other side. Despite with the low volume, market will be able to move on the other side, right? And yesterday is also a lot of day about unfinished business, right? So maybe we forgot to see the information here. There is one unfinished business here at 10,775 still. So if at all any downside, maximum 10,775 can be tested. Again, one more reference there. On the upper side, when the day started, there was a lot of unfinished business. Maybe yesterday we failed to see into that. That is why we need a reference line, automated reference line, which I asked more possibly it will be get released by February. I already had a discussion with him, like, so it's come something like this. You'll be getting an automated reference line, something like this. So here you'll be getting an unfinished business levels like this automated reference line, so that we don't miss any sort of such kind of informations, right? So that is the request we asked for an automated. It's like a zones. It will be automatically marked like a zones, so that we don't miss such information. So whereas yesterday's activity, if you look into that, there was an unfinished business at the lows, which we missed it clearly. So one here, and another 5-minute candle. There is one more there, which we totally missed. If somebody totally missed, they would have been on a different mindset. Right? That shows that possible test of a lows, and the AB power high shows possible test of the highs, and so this has a temporary downtrend. So this 2429, right? So that that's a high volume at the day high. If at all it haven't got tested, it has a testing odds of in 1 or 2 days. You can expect price to come and revisit back around 10,954 levels with a greater accuracy. Right? So again, it's AB power high as well. So there are double odds. We can say like 10,954 will be having all the odds to come and revisit back. Do I see any immediate downside setup? I don't see that. I'm seeing the downfall is arrested by a momentum auction reversal, which you can easily clarify from the half-an-hour time frame, right? So that's the thing. Immediately, I'm not expecting any downside. I'm expecting by this expiry, again, one more test of 10,956 levels, or maybe 10,960 or 10,970 levels. In a worst case, on the budget day, I'm expecting some stop hunting at 11,000 levels, because 11,000 levels, many stops might be still sitting around. That is a worst case scenario. It may happen, it may not happen. But if it is happening, it could happen only on the budget day, right? So budget day. But looking into the bigger picture, let's talk about a bigger picture here, right? So looking into the bigger picture, you could see this. There is all these levels, 11,000 levels. Whenever the price is testing, it is coming down. There is no seriousness over there from the buyers above 11,000 levels. It got sold off. It got sold off at 11,000. It got sold off at 10,980 levels. It got sold off at 11,000 levels. Maybe what could be a possibility here is that when the price is reaching back again here, let's say a budget day is about to be near, maybe we can expect some kind of spike, and then it could create some sort of an excess in a worst case, where all the stops would have been go for a trigger, and then market tend to come down. So maybe I'm expecting some sort of an crash, something like this, post the budget, right? I'll tell you why. I'll tell you why I'm expecting this kind of a crash. So far, what happened right from October low, November low, December low, and January lows, there are multiple lows got created, right? So you can see there are almost 1, 2, 3, 4, 5, 6, 7, almost 7 lows got created so far, and all the lows are continuously, it is making higher lows, right? All the lows are making continuously higher lows. So at the same time, you can also see the compression here. The compression is getting very tightly packed, right? We had a top setup here. We have a back-to-back G2 high. It could be a top setup, or the top setup also comes in the form of an excess, like by taking out all these tops and then coming back, it creates an excess on it creates an excess on an even day. Even day, anything could happen, right? So something like which happened in the S Bank, it could happen something like this. So it can create an excess. It was a top setup, but it will again create one more top setup there, thereby removing all the stops. So it is a possibility. That is why we don't participate on even days unless market takes a direction. And think about the lows. The lows which are here are fine. The lows, the difference between this low and the other low is fine. That's how good market moves. That shows that it is still a stronger market. If you find a distance between the lows, it's much bigger. It's a good market, and the distance between the lows are a bit good. Again, you can see a good lows coming in. Again, a good lows coming in. But now see that the distance between the lows are getting closer and closer, closer and closer, and closer and closer. Right. So this is mostly short-term traders' behavior. The short-term traders, from a bigger perspective, are maybe we can say like maybe in a Wyckoff principle rule, you can say some sort of distribution is going on here, right? So the institutions are distributing to the smarter hands. Where so far, what is happening from the thing is that the sellers are trying to push hard on the downside. They are not getting anything at all. The sellers are not trying. They're really pushing hard, but uh, ideally they're not getting anything at all, because a lot of frustration I'm seeing among the sellers. Every time they push downside, they're not even able to break the previous swing lows, right? So every time they break a previous swing lows, also it becomes one form of higher lows right from now October 2018 onwards. And again they are trying to break here. They're not able to penetrate below the previous low. Again they come back to the resistance level. They break here, they come back, they try to break. So now every time the sellers are looking for where the break is happening, right? So that's the thing which is happening right from December onward. December 1, 2, 3, 4, 5. So far 5 attempts has been made to break the previous swing lows, but the sellers are not able to get it, right? And on the other side, people are also finding certain sort of resistance around 11,000 level. This is what everyone sees the information, right? This is the picture, everyone sees it. But now, so in any good downtrend, right? So you should be finding the people looking for where the bottom is. That is the kind of people. If you look into this past November crashes, or the October crashes, or the September crash or the October crash, people are trying to figure out, hey, this is the bottom, that is the bottom. Every other day, people are trying to figure out where is the bottom is. That is a bear market. If people are trying to figure out where the bottom is, that is what the market bottom is. People are not now talking about bottoms, right? That last 3 months market would have been completely erased. Now people are trying to find how the resistance, when the resistance will break, right? Or people are trying to figure out that every damn fall is getting bought out over here. And this is a compressed action. I'll show you similar compressed action in gold. Then we can think about. I'll also show you a couple of examples from USD JPY, how these kinds of compressed auction leads to, right? So that's the. So I was searching for a similar compression auction, how it has been resulted into it. I'm able to find only 2 patterns so far. So one from gold and another one from USD JPY. And of course, I haven't searched for much of patterns. I'm just scrolling through the gold chart, and then on the daily time frame, I found this one. So maybe XAU USD. So here is the gold daily chart. Interesting, gold has been crossed 1,300 levels. There was a sharp up move came on last Friday. Right, so this is a weekly time frame, but let me go to the daily time frame. You might find something interesting, which closely replicates. It's not. It closely resembles what is happening right now in Indian markets currently. So this is closely and almost a year of a behavior. So whereas I am showing a kind of an hourly behavior, whatever I've shown you in Nifty is a hourly charts. Right, the same kind of behavior which is there in the daily time frame, where you can see it makes a lower low, higher low, again a higher low, again it tried to break the previous low, again it forms one more higher low, it creates one more higher low, and it creates one more higher low. You can see a lot of compressions here. That's kind of situations we are in. There was a fall, it got bought out. There was one more sharp fall, it got again bought out over here, and every time they are hitting the ceiling there. Every time they are hitting the ceiling, and then now maybe some sort of trigger comes. There was a sharp one-sided move, a relentless, low and steady one-sided move without any resistance. That's the thing which happens over there. I'm also go back and show you similar examples from USD JPY. Which happened some time back. Similar example. I was looking for similar set of compressions which happened somewhere in the past, how the end reaction was. Look into this. This is something little closer to that. So there was a lot of one swing, second swing, third swing, fourth swing, fifth swing, and it keeps going on in a compressed fashion, and then eventually it falls down. One more place I had seen similar compressions. Not here. All these are good moves. You can see the lows getting established between one low and other lows are pretty different. So you can see that the swing low, and there is a huge difference between the next swing low, and there is a huge time difference between the other swing low. These are signs of a bull markets, right? And then it creates one more swing low. If it is creating a higher lows like this in a broader fashion, then it's good. Otherwise, if you're seeing a lot of compression, then a lot of crowded activity is happening. Maybe some sort of distribution is going on. This is a good low. This is kind of maybe this could be an accumulation. All these are accumulation points. If you are seeing at a fair distance price, right? If you are seeing all these lows coming at a very distant level, there is a significant distance between major swing lows, right? So that could be even if you look into Nifty also, similar lows are happening at a let me go back and check the Nifty, the current scenario. Right. So you look into the major swing lows. The major swing lows happened over here, and again over here, and over here, and over here. That is a sign of a good bullish markets, right? That's a good sign of a bullish markets where the major swing lows are happening at a relatively and fair distance level. So there are multiple swing lows created. Most of the swing lows are having significant difference over here. But the same thing is not happening now. Now we can see the daily chart. The swing lows are getting 1, 2, 3, 4, 5, 6. It's kept happening in a every time I'm seeing a reluctance to fall from the players, and most likely every fall has been bottom out. Now people, when the next fall happens, people will try to figure out this is the bottom, that is the bottom. If you are seeing that kind of things, then probably you have to stay away from calling the bottom. You have to allow the market to bottom on its own, right? So that kind of thing which is going on over here. So maybe I believe in a very short term, it could be a lot of uptrend which is going to be there. But once the event is there, we have a very clear picture about that, whether are we going to see this once this compression is over. This compression somewhere get over. It cannot keep on happening for a hours. So if around 11,000 is going to be the reference level, right? So next to if at all 11,000 is going to be the reference level, they will start writing 11,000 call again next series, right? That is where now the question comes: who writes the call? Right? That is where comes the participation OI. Okay, let's not talk about this. We'll talk about it later. But so what I'm expecting here is that 11,000 call. If next series you are seeing that people are defending 11,000 levels, then could be one more place where it can be taken out intraday at the max, but it can create an excess, and the end result could be something like a steep downtrend, something like that. That's what I'm expecting over here. Maybe it could go even worse, right? So in a worst case, it could even go worse. Only I don't know. Maybe I don't know how worse it could go, but it could go as much as possible. So until then, learn to play that uptrend possible in a short term. That's all. Try to play all the small uptrends, but once the event is over, be cautious on playing all these small uptrends. That could change. We once the event is over, we could be in a different realm. There could be a change in the market dynamics, complete change in market dynamics. It's not the same old compressed markets. A lot of behavior of the market and markets behavior itself is going to change. So the way you traded now, you cannot trade the same way, right? So it could be a different way to look into the markets. And what I want to show you now is what? Yeah, I just want to show. Just give me a second. So the top-down analysis, right? So let's bring a top-down analysis here. Always, it's good to start with the top-down analysis. It's inside backup formulas. Yeah, price. Where is the price? Basic charts. Basic charts. Price. Minimalistic. Right. So we'll always start with quarterly. So what are quarterly? What we are seeing here? Can anybody comment what we've seen from the quarterly time frame? Why we are saying that quarterly time frame is showing some sort of riskiness for the investors?
Excess.
Excess. There is a clear excess here. What does an excess mean? Excess is an end of one auction and beginning of another auction, right? So that is an significantly, and it's very prominent in quarterly time frame, and that too we are balancing here for quite some time in this band. So that's pretty clear. And so far, the 11,000 levels are acting like a kind of a resistance, and call writing happened for this month, and so far we went sideways. That is fine. But the same call writing, if it is happening at 11,000 level, it could be one of a significant sign that it is a topping out pattern, right? So I'm going to look into the next series open interest at this point of time. Maybe it is prematurely developed, but over the next 3-4 days, if more activity is happening at 11,000 levels, on budget day, 11,000 is getting deferred on EOD basis, and that is where we need to wait and observe and take. You'll be getting an ample amount of time. Once the budget gets over, you'll be getting an ample amount of time to initiate a fresh shots if at all 11,000 call writing is happening on the higher side. No matter what, they might break because it's kind of a psychological reference. They might break by even by 50 point or 100 point, even at times could be 200 points. But end of the day, if they are coming and closing down below 11,000 levels or exactly at 11,000 levels or kind of 11,005 kind of levels, still that could be a significant potential sign to initiate a positional short. I'm talking about positional short here, probably still that could go around a minimum of 500 points, right? So I'm talking about minimum of 500 points there. But the thing is, those kinds of things you will be able to confirm only that event is over. Once the event is over, you'll be able to clearly say that is that a top or not. By the end of the event day, you'll be able to get to it. But during the event, trading is very risky, right? And let's come back to the monthly. Monthly was also kind of balancing here. So monthly is balancing. Here it's kind of an almost 13 months has been crossed. So 13 months, there was a clear balance. We are at the kind of an upper end of the balance. This upper band comes around 11,200. At the max, they can go to 11,200, right? And if we look again into the weekly, one of the deadliest compression what we are experiencing right now, which we never seen in the past, at least last 2 years. If you haven't seen here, very first time you're experiencing here, a lot of trades would have been happened by many people. Many positional traders would have been wasted their money because they initiate a long at a higher balance, price goes short, they initiate a short, price goes long. This keeps on happening. So so these are the zones where most of the very short-term positional traders who are looking for 100 points or 150 points, those kinds of traders, it tested the patience. It tests the patience of most of the traders. And that kind of markets, we are right now on the weekly time frame. A lot of compression, too much of compression is there. And on the daily time frame, market was moving in a balance. Still, it is kind of a balance here on the daily time frame. You can see and critical compression is going on in this band. On a daily time frame itself, there is a balance. The entire month is balancing between 250 point range, right? So a lot of activity was happening. And late break, it was an outside bar. Many people like to trade on outside, but they see outside bar as a continuation. If you see only the outside bars, right? So not every outside bar is a continuation unless it shows significant strength from the market profile perspective. From the market profile perspective, what we've seen is not a strength. It is a weakness. It's a late players are coming and shorting that markets, right? So at the same time, you can also see that crowded lows, 1, 2, 3, and 4 crowded lows are there. And most of the cases, you can see a lot of short-term buying activity happen. The entire zone we are seeing, and short-term buyers and short-term sellers are controlling it if you look closely inside the profile. And finally, we look into the 30-minute time frame, right? So if you look into the 30-minute time frame, we got a balance previously. Kind of an balance got built in this zone. And yesterday was kind of it got back outside the balance. It went on dripping down. That's a good sell-off, but it's still a bad sell-off because the way it left the clues at the tops. So it's a bad sell-off. A good sell-off will be like that. It will not leave any clues at all. It will not give any clues at all. There is no AB. There is AB poor high here. Order flow perspective, there is an thick sellers at the top, so a thick buyer at the top. So it's not a fair volume which is left at the day's high, so that it's an incomplete auction. So price has all the behavior to get back and revisit those levels, and that is where if you look into the current Friday scenario and compare next 4 days of scenario, if you are seeing a radical change coming in, a lot of positivity, all of a sudden a lot of positivity will kick in, all of a sudden a lot of positive stuff will be coming in the markets, a lot of expectation among the budget will be kicking in, media channels will be completely topsy-turvy to the positive side. You'll be seeing all those stuff, right? So those are the fair indications. Even if the budget is start trading, right? So we'll be seeing most of the topics like markets are trading positive before budget announcement. So those are the subtle clues that we are very close to the top. And let me also pull up the open interest from the next series. So I use option action for my OI studies. And it's a free tool, by the way. Option chain. So Nifty 50. OA lookup. So this is Jan series. So far they have returned 11,000, 10,900 call. It doesn't matter. So this is last series, last week of expiry. Even they can break 11,000 also in the last week. So it doesn't matter. Last week expiry doesn't matter. So it's always good to move to the next series. So next series, as of now, 11,000 call is premature. They're holding that. That is one of the strongest open interest. But if you see in the next 4 days, if in the next 4 days, if these the contract size is very small, the build-up is not that great. But all of a sudden, you are seeing the next 4 days, it's getting risen. Price also rises up. The open interest also rises up. End of the day, on the budget day, only you'll become to know that whether 11,000 is going to get defended or not. Because it's premature to say that this will definitely they will defend now. But on the budget day, if you're seeing that on the event day, if you're seeing that price is going up above 11,000 or price is coming very close to 11,000, but 11,000 call writers are taking control and they are not willing to give up 11,000 on the budget day. That is a significant clue that we are at the potential trend-changing behavior zone there, right? So once the event is over and still prices at 11,000 or something like a 10,998 in the spot, I'm talking from the spot perspective. So that is a sign that sorry, I just lost the connectivity. So by expiry, if you're seeing that 11,000, I mean, by this expiry or on the budget day, if you're seeing that 11,000 is going to hold on EOD basis, right? So that, and at the same time, you're seeing the call rating is going to happen, then that is a clue that this market is having a very high probability odds that it's going to be topped out with a fair risk reward ratio. Again, there I'm talking about 1:5 or 1:10 kind of setups, and that will be get confirmed somewhere around once the budget is over, right? Okay, coming back to the picture, let me if you have any questions about market profile, we can take questions for next 15 minutes and then we can move on to the topic. Let me know if there are any questions, even if it is a small question, silly question also, let me, don't bother about it. Let me go and answer all those questions.
Hello, sir.
Yeah.
This is not regarding market profile question. I want to learn option analysis chain. There is any course from
most
options.
of the basic options courses are available in the internet.
Not basics, that option chain like that, you show an option action like that. One
Yes.
graph is there. No? I don't know about that.
That's what the basics. They are basics of options. The option, probably you're talking about the open interest, payoff graph, those stuff. See, those are the basics. You can get it from the YouTube itself. I don't think it's
Okay.
Yeah, thank you. Ramesh, you can mute yourself. There is a lot of background noises getting.
Yeah.
So if you want to learn options, probably YouTube is one of the finest tool. All kind of basic stuff is already available there on the internet. So where if you want to learn about how to write options, how to play naked options, all kind of rules are available over there. All the butterflies, iron condors, all the payoff graphs are available over there. So maybe let me give you some couple of links. So options, payoff. Somebody in the world would have been explained clearly. So maybe you can follow this option alpha. They've done a lot of all the basics videos, right from the basics, right from the advanced stuff, completely explained over here. So
you'd rather
you would have
spend your
been
time actually.
You would be able to get more educational videos from them. So absolutely, totally, it's completely and decent learning stuff. And next one is most of the option writers, they hang out on Tasty Trade. So tastytrade.net. Tasty. Most of the pro option traders, they learn from Tasty Trades, Tasty Trade. So you just go. A lot of basic to advanced videos are there, explained in a very with the decent data sets. I mean, they have a live channels also, and one of the good place where an option trader, if you want to be a professional option trader, it's most of the professional option traders hang out over there, and they have a lot of educational materials, right? So a lot of live sessions they used to do. So here they might have closely all the option setups, right from the basics, advanced stuff, the option strategies, all those things are explained in a very elegant manner. That I can say that. So maybe we can use this. I'll copy it and then I'll copy this link and put it to option trading in that channel. So maybe you can use this as an right. So you can use this as an setup so that you can also make use of this, right? Yeah. Any other questions? Kindly ask questions only relevant to market profile. No questions on market profile? Otherwise, I'm going to ask questions.
Sir, the sell-off has come in last half an hour, 45 minutes.
Yes.
Don't you think the institution also would have come into that?
Yeah, maybe. Maybe as I think it is more of a distribution is going on, the way that the kind of compression is going on with the current trend, right? So it is making people believe that every downfall is getting it's getting completely bought back. So it's making an impression that some strong buyers are coming and buying it, but ideally it is not. So a lot of distribution activity is happening there, and you can see the weakness from the other small caps or mid caps. You can see a lot of weakness coming in. So let me go back to the other intermarkets. The intermarkets are complete. That is, you can see a complete divergence over there. The one is from the Nifty Junior or the Nifty Next. It was going down for almost last couple of trading sessions. Last 5 trading sessions, it was completely going down. And CNX mid caps are down last Friday by more than 1.5%, and still it is. If you see the overall thing, it's going down. And if you look into the small cap index, the small cap index is going down. Everyone is going down except the Nifty. And I do believe Nifty will go down, but not immediately. It might be anticipating some sort of the budget could be a trigger. It doesn't matter whether the budget is bullish or bearish. It doesn't matter. I believe that budget could be a trigger to take a plunge. When the budget is over, only you'll come to know. Market don't give such kind of clues all the time. Right? So either 11,000 is a ceiling, or 11,000 will act like a ceiling by end of the day. Right? So it's difficult to say that. But by end of the day, if you're seeing that 11,000 is still acting like a ceiling, that is where a confirmed market top could be. Right? So, but that's a clear weakness from the small caps. Small caps are clearly going down, another 1.6% down. And but our market is still stuck in a range, right? So our markets are still stuck in a range. Maybe the people, one of the worst thing what you can see is watching the 200-day moving average. So Nifty, if you look into the Nifty is crisscrossing the 200-day moving average. And so a lot of compression was happening around 200-day moving average. Many investors who used to watch this information, right? And some places it looks like it took like an exact support, but most of the cases you can see when it's gapping down, everyone was anticipating a support there. When last time it was there, it broken up with a gap, and it went down again. It came very close to the 200-day moving average. Again, it went down. It exactly tested the moving average. This time they crossed the moving average, and again they went down. Again they went up. They took supports exactly at 200-day moving average to 2 days, and then they rallied back. Again they went down to the 200-day moving average. They took a support at 50-day moving average. Again, people watch this 50-day moving average also. You can see every time price is taking a support at 50-day moving average. And again, it's doing a lot of crisscross around. Not one time, multiple times this crisscross is happening, right? So that is one another place. It is. I mean, if you are an investor, you might be watching all these levels, the 200-day moving averages. Right, and again now price broke down below 200 moving average last Friday because of a news announcement, the MSCI news announcement, and but still it is at a 50-day moving average now. Again, on Monday, if you are seeing that the price is going about 10,840 levels, again you can see that the investors will come in and say that this market is going to go up. But ideally, it's a slow and steady compression movement, which is not a good thing. But a lot of intermarket divergences are already there. Though those small caps, mid caps, junior, it's showing a lot of divergence over there. And in fact, Maruti went on making a 52-week low. So those are not good signs. But from an immediate short-term perspective, there is some trading opportunity, right? So bigger time frame doesn't look good, but what you should care about tomorrow is what is going to happen tomorrow, right? It's not what will happen down the line 1 month later. As a short-term player, your focus only should be on what could possibly happen tomorrow, right? That is only one setup. So that setup is looking towards probably an kind of a long setup in next 3-4 days. Maybe we might do this, back again, do this again, go back. It keeps going up and up. And maybe the budget, once the budget comes, maybe a major decision is going to get taken up. That is where if the 11,000 calls are going to return there, even in something like this, if it's going to happen a budget day, it's going to end up like here. And maybe if situations are favorable, what we could expect is a deep correction, right? So until budget, I don't think no major things might happen. So far the sell-off is happening, but every sell-off is getting bought out. Every sell-off, every damn sell-off is getting bought out, right? So let's see. Let's revise on budget day how things are going out there on the budget day. Or we'll also compare the current scenario on Friday ended at so much of bearishness. You think about Monday. This is going to change the perception, or how the sentiment is completely going to change in the next 4 days. That's what we're going to study here. Next 4 days, how the complete sentiment is going to change. Is it the same negative sentiment is going to continue, or there is a complete positivity is a positive vibe is going to come up? That's what we're going to study over there, right? And let's talk about possible top setups, right? So
before going to that, can we see the HDFC ICICI ABC elongation yesterday happened?
Yes, yesterday there was an kind of an ABC elongation. It's an inside ABC elongation. It stopped at an the C period itself, and those single prints got a clear, right? So which is not a serious ABC elongation.
Okay.
ABC series elongation. The B period, C period haven't elongated. In fact, it created like a poor high. And most of the such cases, the C period be the top or the bottom if it is happening on the reverse side. And the similar case is on ICICI Bank. It is an ABC elongation, but then it cleared those C period single prints also. It cleared the B period single prints also. Then it went down, right? So we also thinking about looking into the possible setups, but for that market has to favor it. As of now, it's not a right time to still initiate it. There is a one AB poor high at the top at 382 levels. The question here is, can I trade this now or not? The answer is still not yet. Maybe if you look into the short-term perspective, there is an poor structure 1, 2, 3. It's only 3, I guess. So it's not even a. There was a kind of an rally high came. It's a Friday rally high. You can see that it's a Friday rally high. So this is going to be an important reference to go positional long. It's a Friday rally high. It was a Friday rally high, right? So it's a clear Friday rally high. So this level has to be looked into, that if you want to go long, this level has to be clearly given some sort of a preference over there. Otherwise, if you think about any weakness which is coming on, there is one failed auction buy as well. We don't give a reference to that. This G2 high is now more than 2 days old, so it's got and it's got rejected. From an inventory perspective, I'm still not seeing any inventory getting long to too long. But yes, this Friday rally high is one of the subtle clues, possibly that the market could be a possible bottom. It's a Friday rally high as well. And otherwise, I don't see any clues that for the market to come back up. Are there ICICI Bank results still pending, or it's done? Any idea?
I am not sure.
Maybe we can get some such information from here. So if you go to ICICI Bank, they give an estimation about when the earnings season could possibly happen next. Maybe I would have disabled the earnings. Events and alerts. And it's not showing any earnings. Maybe for something like Lupin, it used to show the earning dates. So the E is the expected earning date, but ICICI Bank, it's not showing up any. We check if it is showing for international markets. No, it's not showing anything. Any idea when the ICICI Bank earning date is?
No, results haven't been announced yet, I think.
Okay, there is a question. Is there a possibility that budget is favorable and a new rally starts? How to confirm that? One thing is that 11,000, there won't be any call writers at all. That is a clean clue that is not bottom, top at all. So on the budget day or end of the budget day, you're seeing that 11,000, there are no active call writers, no higher open interest build up, then we might be in a different scenario, right? So it could not be potential top. But most of the events are the triggers where you can find that call writers are defending there. So ideally, you have to wait for the call writing to happen at 11,000 levels. Then in such a case, yeah, it could be a potential top setup, right? So
It is on Jan 30th.
Jan 30th. Okay, maybe,
Yeah.
maybe there could be a positivity coming, and we need to look into that seriously then. Because most of the earnings, before the earnings season, most of the move happens. So one of the clue could be an acceptance about this rally high. So there is this Friday rally high, and otherwise, that's the final clue over there towards that AB poor high. They could be taken out because most of the time it usually spends more than a month to take out. It's still 11 Jan. but if there is any possibility to come, it may come faster, right? So before the earnings season, they might be coming and hitting at 382 levels or so. It's also a AB poor high, and it's also a weaker high. The odds of coming in and testing in a very, very short term is very high. Means maybe before budget we might be seeing this level again, possibly 382 levels, right? So that is one information where now it's flooded with some negative news, which ideally doesn't matter much. Market doesn't even care those kinds of news. It looks like it is caring, but ideally over a period of time, it looks like it doesn't. Those are the most of the time, and there is a poor structure here: 1, 2, 3, and 4 anomalies. Only one anomaly got cleared, so still it's a valid poor structure here. And how about this? There is a poor structure here as well: 1, 2, and 3, and 4, and 5. So there's a poor structure. There is a poor structure here. So let me mark all those references. Text. So this is a poor structure. Undoubtedly, this is a poor structure. And in fact, it's a poor structure, but then immediately there was some sort of resistance coming at a single print zone. That is one of the resistance as well. Price needs to break that level to go up. But look into this structure. We can see a lot of emotional selling happening over here. Emotional selling happened over here as well, because it's also one more poor structure. You can see from the structure it's 1, 2, and 3, and total almost 4 anomalies got created: 1, and 2, and 3, and 4. Poor structure. It's again poor structure. And on 25th Jan, that is last Friday, it is also a kind of a poor structure with a Friday rally high. So too much of emotional sell-off. Too much of emotional sell-off happened, and we got the only clue what we got is a Friday rally high. So that is one subtle clue. Any acceptance above Friday rally high could be an possible. You can see this kind of option coming in. There is the straight drive coming in. You should be onboarding to that straight drive and keep monitoring this reference level. That is at the max. That's what you can do. And what happens is most of the time it elongates and keeps moving up and up and up without any stopping manner. So a lot of poor structure here. A lot of weaker hands would have been participated. A lot of trading money would have been selling ICICI Bank emotionally, and which is not a good thing. The other stuff what we can see positionally is the AB poor high, and it's also a weak high. It's an AB poor high plus a weak high, which means some stops are here. AB poor high plus weak high. So 382. So how much is 382 options? So the 380 options trading here are some 370 options. Maybe one can go and get some cheap options there. It may happen or it may not happen. But since it's just simply betting on the odds. So calls, let's say 370 calls, currently trading around some 3 rupees. Right? So let's observe this 370 call, or even 370 call. It's worth monitoring, I believe. Yeah, so 370 call. Let's have a firm check what could happen over here. We'll continue monitoring this ICICI Bank, this 3 rupees call. Will there be any chances of testing 382 by this series? Then all these weaker hands are most likely to be taken out, and that could be one possible place where you can think about betting on odds here. This location can be one location where you can think about betting on odds. The moment price started accepting above that is the place where you have to be thinking about odds here. Not immediately. Right? There are no clues. Maybe Monday they could take a different direction also. But if at all you are seeing this straight drive coming in, or price opening gap above and it's initiating a drive, So those are the clues that these markets are not interested in going down immediately, right? So maybe they could reverse, or they could reverse completely. And but one of the places where you can think about looking into trading on the upper side. Right? So let's see that how it goes, right? So again, okay, now let's come back to the topic here. So I'm going to talk about couple of ways a market could top out or bottom out in a short term, and in long term. What are the ways a market could a long term or even medium term? Right. So we're going to give a classification which one tops out in a short term, which one is a medium term, which one is going to happen in a long term. This is a classification. We're going to look into that. Most of the topics we already discussed already, so you are already familiar about it. But this is again an compilation of how a market could top out or how a market could bottom out, right? So these are just patterns. These are just patterns from the market profile, which I feel that, which I observed in the last 5 years, which I feel that this is the way any market could top out or bottom out. This is one of the ways where the top up probability is kind of highest. Now, one of the very first probability is, and it's a short-term price action. It's a short-term top or a short-term one of the place where a market is nearing the top or nearing the bottom. So it's a back-to-back prominent point of control. It is not the way a market will top out or bottom out in a bigger way, but from a short-term perspective, when you're seeing a back-to-back prominent point of control, that could be one of the significant signs of a short-term price action. So maybe to explain this with an example, I'm going to take this here. So one of the day in a good bullish markets, you're getting an prominent point of control and one more prominent point of control. There are two prominent point of control over here. This is number one and number two. This is one of the way you can expect a short covering rally. You can expect a short covering rally in a bull markets. In the bull markets, you can see this kind of behavior because all this is one of the places where the inventory is getting short to too short. All these places they would have been ramped up their inventory. Here they would be cutting off some of the inventory, and all of a sudden the inventory went short to too short, and price started resuming their inventory pile up again. Right, so that's how the long-term players play the game. In a solid trending markets, in a solid bull markets, you'll be seeing like this, and all of a sudden market looks like it is going down, but it started resuming back. So those are the places you'll be finding an back-to-back prominent point of control. Right. The other ways a back-to-back prominent point of control can come is in a serious uptrending market. In a serious uptrending markets, it can come such kind of a setup. So it will be something like this, like an uptrend. It's an prominent point of control. Again, next day it forms a prominent point of control. It forms a back-to-back prominent point of control. The odds are that if you want to play the odds, you should not jump immediately. Once you're seeing that the prominent point of control and one more prominent point of control, don't jump immediately. You might get spoofed. What could happen is that one more day they could do something else and then come back down, and finally they could take it down. So that is where you have to monitor confidence, right? They eventually these prominent point of control would have been taken out. By this time, you would have been realized that many prominent point of control, no matter what, back-to-back prominent point of control often gets cleared faster, right? So, but then in a very good trending markets, you could see this kind of information. This is a very rare setup which I'm going to give now. It could create a sequence of prominent point of control. Prominent point of control number one, number two. So every day, price opens gap up, and then it creates a prominent point of control. It creates a prominent point of control. Right? If the numbers are too much, 1, 2, and 3, and 4, so this could bring a medium-term correction. Either the correction can come slow and steady, and it takes off. Maybe it could take some 4 to 7 days to clear everything in a slow and steady manner, because this is one of the places where the short-term inventory is dangerously getting long, but it has all the odds of clearing all the 4 prominent point of control in a row, or possibly it can also take it in one shot. In one shot with a deep plunge, it can take it out with maximum of one day. Within one day, it can take out, or it can also take out anywhere between 4 to 7 days. But when you're seeing this kind of an exponential back-to-back prominent point of control, means every other day is a prominent point of control. If it is reaching 3 or 4, those are significant clues that you have to wait for the market to change, right? So the only thing is that you should not see an high confidence market. Instead, you see a low confidence market. You can go and appreciate that. Or let's say one of the day price comes and touches exactly one of the prominent point of control and bouncing back. Those are more clues that we are somewhere very close to the top. There could be some sort of correction is going to happen over here. That is one more clue which you can get with a multiple prominent point of control, right? So that is also a sign that inventory is getting long to too long. That is one of the sign where this kind of medium term corrections could happen, right? So when we are talking about, maybe we can take an a document, and we can create a brief compilation about how to play these kind of games. Looking into the information is not the edge. How to execute the information is the edge, right? So let's say like this is one information, waves market top out or bottom out. Back-to-back prominent point of control. So short-term information, two consecutive. I'm talking about back-to-back means today and yesterday. It's not like 2 days back and today. That is not a back-to-back prominent point of control. The back-to-back prominent point of control is always 2 continuous days, 2 consecutive days. And then next day, price is experiencing low confidence buying or low confidence selling. Low confidence selling, then look for liquidation, or even say in that case you can look for a liquidation. Or if back-to-back prominent POC building on upper side, and next day markets are showing high seller confidence, or weak, or we can say like low buyer confidence, anticipate liquidation from short-term players, and it is a short-term price action. It's a short-term price action. You're done. You're out of the game. That's it. Something like that. So you cannot expect a bigger corrections here. Most of the corrections will be a liquidation, and then it's done. Then market will be trying to do something else. And the second way, let's say if the back-to-back prominent point of control is building on the downside, back-to-back prominent POC building on downside. Next day, you have to wait for next day to take an action, right? So it should not be an immediate jump saying that this market will crash. It may or it may not. So if you are a conservative trader, you have to be a slow trader here. So it's okay to wait for one more day. So next, if the very next day itself there is a deep fall, it's okay to miss such an opportunity. But most of the time, it doesn't fall on the very next day itself. Market opens casually. It tries to take a day high, and then it comes down, and then liquidation happens lately. Right. So next day, markets are showing high buyer confidence. In that case, you have to go and get it immediately, because that could be a start of a fresh rally. or if the market is showing low seller confidence, that is an opportunity to take a mean reversion longs, then anticipate long rally from short-term players. Right, so that's how we look liquidation or short covering rally. The second case is medium term, where you will be seeing back-to-back prominent walk, three or more than 3 or 4 in a row, 4 in a row. That's the maximum I had seen so far. I never seen and 5 prominent point of control back-to-back in a row. I never seen that. But if you're seeing 3 or 4 in a row, then possible counter auction could bring medium term mean reversion. Whichever say it is building. Let's say the point of control is building on the upper side and all the prominent point of control is not getting cleared, then you can expect a complete mean reversion on the downside. If the back-to-back prominent point of control is completely building on the downside, then you can expect a sharp mean reversion points on the upper side. So again, that is there. Bring medium term mean reversion. This is the second way a market could top out, but this is applicable for medium term. You can say like a medium term price action. This happens very rarely. It doesn't happen every now and then, once in a 6 months or once in a year or twice in a year. That kind of setup could happen. Price action. Okay. How about the next? The next one is a short-term price action, kind of a 45-degree line. We already seen this. A Friday 45-degree line is more of a bullish case. So it should say like more weightage has to be given to Friday 45-degree line. So what is a 45-degree line? I'm explaining again one more time. It is like we have a value area. Price was doing something, and in middle of the day, price plunges back to your point of control was here. Initially, it got formed. Maybe it formed in the form of an A, B, C, D, E elongation or A, B, C, D, E, F elongation. And the middle of the day, price plunges below the value area low. But lately, emotional sellers kick in. So a lot of emotional sellers might be kicking in below the value area low. Could see that price could have been falling fast, but lately there will be a slow and steady recovery towards the point of control. So price closes exactly at the POC. Price closes exactly at the point of control. And the profile looks like, and if you see a composite profile, it looks like a 45-degree line. Right? So 45-degree line, that is usually a sign that the sellers, the emotional sellers got a trap below the previous day low. So again, that is a significant clue that could be an possible reversal zone. Like the similar reversal zones can come in the form of a Friday rally high as well. So maybe I'll put this over here, green line, and so that's an indication that it's a short-term price action indication that most of the emotional short sellers got trapped. Right? So most of the short sellers got trapped. They are mostly emotional traders, but that could trigger something like a news or so. And the final one is rally high, Friday rally high again. Friday rally high. Friday rally high has to be given more importance. It's also a bullish case. Short-term price action on a bullish case. Market could immediately bottom out in a very, very short-term perspective, and it gives you some good trading opportunity as well. At times, 100 points, 150 points opportunity from Nifty perspective, or something like a 300 points or 500 points in Bank Nifty perspective. Right, so more weightage has to be given here for a Friday rally high. Other rally highs may or may not, but Friday rally highs are very crucial. So again, one of the cases where most of the emotional short sellers got trapped. Right, so that is again fifth one. Excess, it can happen in any time frame, right? So on what time frame it is happening, it is more relevant to that. So if it is excess happening on a quarterly time frame, let's say quarterly or monthly time frame, monthly or a weekly time frame, then it could be a larger time frame excess. Maybe it could be a sign of a major market top, like major end of a market top or a market bottom. If it is happening in a daily time frame, it can be a major top or bottom, or it can also be short term top or a bottom. We don't know clearly what exactly it is, but it could be either a major top or a bottom, or it could be just like some not short term but medium term top or a bottom. It can happen on any time frame also. It can happen on let's say a hourly time frame also, something like that. It could be a short term bottom. It could be a short term bottom. So what time frame the excess is happening, that really matters. It can happen in any time frame, but as of now, what we are witnessing in Nifty chart is we having a excess on a quarterly time frame charts. So it could be one of the major market top, maybe for the next 1 year or 2 year, 3 year down the line. It could be one of the major top formation. So if something has to change, something that budget announcement could be one trigger. If you are finding that lately there are no decent call raters coming at 11,000 levels, then that is a one sign that okay, maybe market could change complete perspective. But one of the key point where you can look for a reversal zone there. Okay, so excess is one place. Excess is what? End of one auction, and beginning of another auction on the reverse direction. Right, and it occurs on all time frame. It occurs on all time frames. It is one of the zones. It is one of the zones where innovators and the final laggards meet at the market tops or bottoms. Innovators come for the buy at the market bottom, and the laggards liquidate their portfolio there. Whereas at the market tops, the innovator come for a short, whereas are selling their portfolio, whereas the laggards buy from them. That's what the excess is all about. And next comes so how the excess could look like. Excess is kind of at times it looks like an inverted hammer. So if you look from the candlestick perspective, it will be looking something like this. Right, so major market top, and then there'll be a serious elongation followed by most of the gains would have been dropped out. So it will be looking like this, like something like this. Or at times it could be looking like this from a price action perspective. It could have been looking like this, or completely like this kind of spike, and then most of the spike will be happening at the middle of the day. Most of those spikes will be happening at the middle of the day. And or at times there'll be a rally in the first half an hour and slow drip towards the low, stays low. It creates an excess. That is also a form of an excess. If it is coming at a major swing high, that have an impact. Impact at a it could act like a major swing point. So if you look from the candle perspective, it could look like an inverted hammer or kind of a pin bar. Not necessarily every pin bar is an excess, but yeah, most of such inverted hammers looks like an excess. Next comes the open rejection reverse. We already talked about open rejection reverse, but if it is coming at a major swing high, it could have a lot of consequences on a short term. So short term, you can anticipate some decent price action movement. Probably in terms of Nifty, you can expect some 200 points or 300 points correction, something like that. You can anticipate. In a worst case, we had seen a 700 point. It acts like one of the major market top in the short term, and we had seen 600 points, even 700 points slide also from a Nifty perspective. So if it is happening at a major swing high, it could one of the places where you can find a short term top or a bottom. So here we have two classification. Strong ORR comes at major swing high or a swing low. At times, a strong ORR at swing high or low comes with significant volume. So these are the subtle clues that which could bring in short term to a medium term downtrend. At times it will be short term to medium term downtrend. Seventh, one more interesting pattern is which I missed it. It's an ABC outside bar. This is a short term, short to medium term.
Sorry, a small load in this one, sir.
Yeah.
Short term means for intraday or what one, sir?
2-3 days. Can be 2-3 days to
Okay.
some 10 days, something like that. So
Okay, sir.
ABC outside bar, short term to medium term, maybe around some bigger swings. I'm talking about bigger swings. So it can go for even 13 days, 14 days kind of setups. So the ABC outside bar is something like a similar setup. When you're seeing what is an ABC outside bar, we have an yesterday's range. So let's say this is my previous day high and previous day low. This is previous day low and previous day high. Let's say market opens gap down. At A period, but it got back into the range, letter A. At times you might see this A period goes really strong and it forms a B period and it forms a C period. Either B period or C period, you'll be seeing that it takes the previous day high itself. So letter A and B and C. So this is a good auction. This could be a positional auction. It's not an intraday rally, but it could be a positional rally. Positionally, you can expect in a short term to medium term, you can expect something like a 4% movement or a 7% movement, or even at times it can be 10% movement also. That kind of movements are possible with kind of ABC setup. So this month we had seen two setups, right? So one is from ICC Bank, and another one is from Yes Bank. So we both seen ABC along ABC. There are three scenarios I can spot out this month, and I can show you first from the ICICI Bank. In the start of the series, we had this ABC outside bar, and then the same day it brought closely some good swings out after this ABC elongation. A good swing came. That swing stopped at 382. It's almost it's a short-term uptrend. It brings some nice rally from 372 to 382. That's almost 10 points. 10, more than 10, 15 points. 10, 15 point swing from there. 10 point swing approximately. That's kind of a 3% movement. Whereas the one which we've seen in the S Bank we had seen over here. Twice we'd seen in S Bank, in fact. So one of the case where it brought over here is one of the ABC elongation. A and the B and the C. It broke on previous day high with an ABC. And it is not a multi-day breakout when it is breaking ABC. It's an ABC outside bar. Right, and from 192, it went on till 204. That's 210. In fact, that is almost 18 points, means approximately some more than 10%. Right, it's approximately 10%. Right, it's approximately 10% there. Yeah, approximately 10% here. And again, it forms one more ABC. Again, it formed one more ABC at 202. This time it went on till 188, approximately again another 5% on the downside. Right. So anywhere between the returns could be anywhere between 3 to 10 or even 15%. It depends upon the ABC outside bar, but it gives you a tremendous positional clues from a short term to medium term. The opportunity can last anywhere between 4 days, or at times it can go on for 10 days also. So short term to medium term perspective, it's a positional trade setup. ABC outside bar, so it's one of the strong auction. It will be considered as one of the strongest auction behavior. ABC outside bar, right? So whichever the direction ABC is extending, that is the direction. Trade has to be initiated in the direction of the ABC auction, and stops can be easily kept around. Stops can be kept at B period low on an upside auction, and for a downside ABC outside bar, stops can be placed at B period high, right? So easily you can take stops. Initially, you can take the B period as the stops. Depends upon which direction it is. You can take the B period high or the lows, and you can go and take those trades.
So for this one, it should cover the yesterday's range with the ABC, right?
It come again?
So this particular setup, the ABCD outside bar, it should cover the yesterday's range with the ABC elongation, right?
Yeah, it is an ABC elongation. It should break the yesterday's range. So that's outside bar, right? It breaks for both the sides.
Right.
It broke yesterday's low also. It breaks yesterday high also. That's what an ABC outside bar is all about. But it happens. Everything happens in the first letter A and B and C period itself. That A period itself a steeper elongation. First of all, that is a clue. And the B period elongates. C period, either B period or C period breaks previous day high. So that becomes an ABC outside bar.
Yeah.
And that is a significant clue that you should not trade against the ABC elongation. You should go with the flow, right?
Okay.
And then the next setup is all about. If we can do one thing, we can take a small break here, and we'll get back in another 15 minutes or so. So we'll get back by 11:50. So 11:50, we'll get back. Right? Until then, I'll be on mute. Okay, so let's talk about the possible the 8th setup. It's one of the way a major market could top out or bottom out. People are able to hear me so that we can continue with the session. So next comes the 4-day balance, which is coming at a major swing high and a swing low. So it's a 4-day balance. Usually market will be going in a decent uptrend. Usually this kind of 4-day balance happens at the top. So market moves to a major swing high. Market moves to a major swing high, and then it creates an 4-day balance. It creates 1, 2, and 3 and 4 at the major swing high, and then it takes an initiative drive on the downside. It breaks multi-day high with a strong downtrend, and then it keeps moving down. So that's this 4-day balance is going to be if this 4-day balance is going at a major swing top, then possibly you'll be seeing a lot of excitement there. So every other day, price will try to fall and then it reverse back. It try to fall and then it reverse back. It try to go up and then it gets sell off, and then it balances something like an inside bar, and it try to do some crazy magic out of that, and then finally it takes a late plunge, kind of it creates a late pullback low, and then or even the last day could be very much interesting. Let's say this is the last day of the 4-day balance. It could be doing something like a last minute spike, right? So last minute spike, and price close at the extreme. If next day is going to be an event, and the correction starts from there onwards. So this 4-day balance is also a sign that what you have to expect is that look down below the balance and accelerate on the downside is what it gives you a potential positional long opportunity. A confirmation comes at the break of the balance on the downside, right? So that confirmation is what it, or you can expect. And when you're seeing a late spike, and a pullback into the balance, let's say next day price opens gap down and got back into the balance, one of the signs you can expect this side of correction over here. So usually it brings a medium-term correction, not a short-term correction, but mostly it is a medium-term one. Brings medium-term price action. So trend reversals brings bigger swings in the markets. And comes the 9th point. The 9th point is like the G2 high or a G2 low, right, which comes at a major swing high, and the sentiment remains exactly negative for swing high, and the sentiment remains positive for the swing low for the very next day. Right, so one of the ways where we confirm the possible top setups. Recently, the G2, this kind of patterns happened over here. So there was a pattern formation. If you look at the daily time frame charts, recently those top setups came over here. One of the zones, it comes in this band. So this is one of the place where a G2 high came very previously, and this is one of the G2 high. This is also a G2 high, and one of the G2 high came over here. All these setups we identify a potential swing top, and this had delivered almost closely this almost 1,000 points rally. Right, so this is a 1,000 points rally, and this rally almost given some 450 points on downside from the swing high. It is also an excess. That excess created almost 450 points, and this created almost another 500 points on the downside. Right, so most of the G2 high coming at a major swing high. Right, so this swing low was almost a multi-month low, and this high was again a multi-month high, more than an 3-month high or a 2-month high, and this again a multi-month high. So all those highs had given significant opportunity so far, and in fact one more back-to-back G2 high came around. This is a back-to-back secure high. This is something like a back-to-back secure high. It's not a G2 high, but it is an kind of an back-to-back It's a back-to-back secure high, and a similar back-to-back secure high we got right now. Back-to-back secure high we got right now over here. This is right now what we are seeing is this combination here. The combination of this high and the combination of this high, it brings an back-to-back secure high. One more secure high we are experiencing here, which is also one place we can expect a back-to-back secure high. Right, so okay, so one of the places, one more potential top setup is there, but it may be broken because it may be broken or may not be broken. I'm not very sure about it, but because it's come, all these levels are coming at a psychological reference level. So 11,000 levels. Sometime back, similar setup was there on the downside. This is the budget day, and similar budget announcement was happening where we have a psychological reference level of 7,000. Right, so it got multiple times, it got tested. The psychological level got tested again and again. Similar thing was going on over here, where every other day the 7,000 levels got broken by a couple of ticks. It broken largely by 100 points, and again it broken by some 20 points, bounced back. It came very close to 7,000 levels. It broken 7,000 levels. It touched 7,000 levels. On the budget day, it deeply plunged and then got back into the 7,000 levels. So on an even day, it doesn't matter. No matter what, these kinds of things always happens, and it creates a clear one more top setup. So a top setup can be a counterattack by one more top setup. We already have an excess here. You can see, and this is one of the excess. That excess brought some short-term uptrend. Right? And one more excess can be counterattacked by one more excess here. So one more excess here, and it forms one more bottom setup. So there is already a bottom setup which brought a short-term uptrend, and one more bottom excess. Till today, this is not taken out. So again, it tested those psychological levels. So as the price is nearing psychological levels, you never know how the markets will react to the events. You can also expect these kinds of price action. So that is why we say again and again, stay away from any such events. When price is nearing psychological levels, stay away from events. Usually stop hunting happens near psychological reference level. So, but this is one of the place an excess came here. This is a nice clean excess came, and till today this excess is not taken out. It brought a tremendous opportunity on the long side. Right? So this budget, we never know how they are going to react, but I believe once the excess is going to somewhere near to the budget will be again coming back, either slowly and steadily will be coming back, and we'll be nearing this level once the budget is about to commence. Right? So we'll be somewhere around this level. The major decisions will be taken out, maybe a kind of an excess, and then we start slowly, steadily stops moving out. Or it could be even a small uptick, so some 50 points higher, and then we might slowly going down, or probably we come over here. Still, the 11,000 will not be taken out. Still, it could be going down slowly, steadily. This action will not happen all in a sudden. It might take 10 days or 20 days to go in a slow and steady fashion. So that is what I'm thinking about right now. For that, the major clue is the call writing has to happen there. Okay, so G2 highs. So what is a G2 high? A G2 high will be looking like this. A G2 high, a back-to-back G2 high will be like this. So this is a G2 high. The G2 high, where the first letter A period high would have been not like this. Yeah, it's a major swing high. It's a major swing high. We are at the major swing high. This high can be 2-month high or a 3-month high or a multi-month high usually. And price is at the major swing high. It forms an G2 high. And instead of price coming and clearing that, the sentiment remains negative the very next day. And that means it's going to continue. It's going to continue, and it's going to bring some medium-term downtrend. So this can be in terms of Nifty, it can be anywhere between 450 points or 500 points or 1,000 points. In fact, it could be one of the major swing highs also. But from a short term or a medium term perspective, market could top out from a swing level perspective. So one of the place where you have to think about initiating positional shots, again with a fair risk reward ratio, where your stops is only this. This is your stop come zone. This is the level stop come zone. We call that as a secure high as well, because those levels will act like a strong resistance. A secure high is like it has a high probability that it cannot be breached at all. It cannot be tested further at all. So that is why we call that as a secure high. And on a G2 low formation, like it creates something like this. That's not very good. Okay, so price was going down. It reaches a major swing low, and one of the day you are seeing and experiencing this price action, and it forms a G2 low. Right, so value would be overlapping to higher. Look into the value area alone. Value area will be overlapping to higher, and the low we call that as a G2 low. G2 low, and make sure that this G2 low is not getting converted to G3. Otherwise, price again has all the odds of coming in revisiting back, and that brings a short-term uptrend towards a major swing high. So it could form a clear market bottom setup over here. The key here is it should come at a major swing high or a swing low. Next comes back-to-back secure high. That's what right now what we are experiencing, back-to-back secure high. It is one form of G2 high, but the thing is that G2 high happens at a consecutive days. G2 high happens at a consecutive days, whereas a back-to-back secure high not necessarily has to happen on a consecutive days. It happens, could be happen something like this. It forms an high where the letters are not at A, the letters not at L, and the letters are not at M. It forms, it's not at this period. It forms at some other middle of the day periods. And so middle of the day, letter B or C or D, and then it could be one more inside bar or one more inside bar, and it creates one more reference, which is also not at A, L, M period. So it creates two levels. These two levels will act like a strong resistance zone. These two levels which are not coming at the A period or L period or M period, which acts like this. This day can be anywhere between 5 days also, 10 days also. Like there will be an price swing. It takes a downtrend. It does a lot of activity. Again, it creates one more swing high. Right. So this is also a secure high, back-to-back secure high, and these two levels act like a strong resistance. So far, it is acting like a strong resistance for the series, but yes, always an event can overtake, and it creates one more excess also. So on even day, one of the days where we can take a pass there, and then we can rethink about it, because these levels are coming exactly at psychological reference, the 11K levels. An event is nearing, so that is the reason you need to think in a different fashion. But yes, the same thing which is happening on the reverse side, we can also still call it as a back-to-back secure low as well. So those zones could act like those zones gives you a strong entry zones from a positional trading perspective. So back-to-back secure high or back-to-back secure lows. Two short-term swing high. It's not a major peaks, but a short-term swing high. Not formed from high or lows. Not from the letters A or L or M. That is, those swing highs are low, never happened in during first 30 minutes or in the last 30 minutes. Right, first 30 minutes or the last 30 minutes, then we can consider those swing highs. Then those swing high or lows acts like a strong resistance or support levels and forms a high potential top or a bottom formation. Right, so that's back-to-back secure high or back-to-back secure lows. Any questions on back-to-back secure high or back-to-back secure lows? If you want to show, I can show you the current example from Nifty, where we say that it's a back-to-back secure high. We've been saying for a couple of days now, and I also marked that reference level as a back-to-back secure high because it came at B period. So you see that one of the lows which came at one of the highs which came at B period, and which is also one of the short-term swing high, which happened some couple of days back, dated back to 19th December, exactly last month, 30 days back. There was one more major swing high, right? So one more major swing high at 11,015 levels or so. These two levels are not taken out. So far, it is none of the levels are at A period, L period, M period. Both happen at the middle of the day, and both are so far acting like a strong resistance. And then price, every time price used to trying to come over there and used to take a fall there. So that's what is happening over here. So far it is acting like a short-term resistance, and only on a budget day we can take an exception there. Until then, it's going to act like a short-term resistance there. Right? Yeah. Any questions on this back-to-back secure high or a G2 high or a G2 low? We have been talking about it multiple times. I'll be sharing this once the session is over. I'll be sharing it. So excess. So these are part of our checklist also. So if you go through the checklist, we'll be finding most of the things which are there. At least at the market pre-open, you should find that any kind of setups are there or are not. So these are already part of the checklist, so you don't need to go back and check. Once if you're able to fill the checklist itself, you'll come to know that whether there is such any kind of setups are there or not, and you'll be able to get what is the consequences from the sheet. The later part is an exponential poor high or poor lows or poor lows, and at times it comes with a combination of prominent point of control or other factors as well. So that is also, it brings a medium term correction, medium term trend reversal. So usually these kinds of reversals, right? So these kinds of reversals will take time. It will take more time to form. It can go up to 10 days or even 15 days to form exponential poor highs or poor lows. And a minimum anything above 4 or more poor lows or highs are considered as exponential exponential, poor lows. Those are poor highs. We already talked about it in the inventory section, so I'm just skipping this. Nothing much to talk about over here. We already talked about this multiple times. But the odds of formation is once every 1 year or even once every 2 years once. Next comes the 12th concept. Even in fact, we can also call this as an, instead of calling this as a back-to-back prominent point of control 3 or 4 in a row, we can say like exponential uncleared prominent point of control, exponential prominent box. Because there are more than 3 or 4 in a row, we can consider as an exponential prominent point of control. Both brings a medium-term price action. So this also brings a medium-term trend reversal here. And next comes the 12th one. So what is next one? Top balance skip. This is one of the different trading setup, which usually doesn't happen. So far, I had seen only 2 setups in the last 5 years of my experience, but still it is one of the balance. We call that as a stop balance skip. It's kind of a market creates a double distribution pattern and then it got skipped. These double top or a double, double distribution. It comes at a major swing high. It goes like this. Market keeps on rallying, and at the market top, it creates the double distribution pattern. It creates a double distribution pattern. There's a swing high and followed by one more distribution. This double distribution is coming at the market top, and the very other day, we'll be having an immediate reference at the top of the balance because price would have been went up, and price closed at the major swing high, right? So if you look at the profile perspective, it's a double distribution. Next day, price opens gap down. It accepts down below this reference. It keeps moving down. We call that as a top balance skip. This one of the day, this particular balance got skipped, and market does a complete trend reversal. It completely reverses on the downside. So that pattern is called as a top balance skip. At times, a top balance skip could come in the form of an major swing reference level. So something like, let's say, it creates an value area, creates one more value area, it creates one more value area, it creates one more value area, but that particular day could have been like double distribution, forms a double distribution, and price would have been closed above that. If you look at the value area would have been overlapping. It could be a 4-day range, but still next day price opens below this reference and it keeps accepting below the double distribution. It skips the top balance. So this balance would have been completely got skipped. So in that case, price took a clear downtrending path. It keeps going down and down and down. Right. So that is one more interesting top setup.
For how long do we carry forward that reference in case it doesn't get cleared?
Which one?
The double distribution on after a 4-day balance on the top, after a major at a near major swing high.
As long as price is not accepting down below that. So the expectation is immediately it has to, the very next day itself, it has to reject.
Correct, but the
if it's not rejecting, it is not a top setup at all. There is a double distribution pattern at the major swing high. It can come in any other way, but it's coming at a major swing high. So maybe with multiple balance or without multiple balance, it comes and it creates a double distribution balance. Okay, it creates a double distribution balance. The expectation here is that the very next day, it start accepting down below the double distribution balance. That is a sign that this is a market top, and this reference level is going to be your zone to short this market, and it used to tend to go down.
Okay.
It's a potential reversal sign.
Okay.
Right. So we call that as a top balance skip. And 13th one, neutral day extreme. where it is a major swing high, point of control not migrated, but far off. This one of the case usually comes when the inventory is getting long to too long. Usually you'll get a neutral day extreme where there is a major swing high formation, point of control not migrated, but only price migrated. And then one or two, it requires one more day to take a confirmation, and then price again used to tend to go down, or it also happens the reverse way, something like which happened in Nifty here. This is a neutral extreme day on the downside. Right? So it's a neutral extreme day, and it finally forms a swing, and completely it reverses on the downside. Completely reverse on the downside, and there is one more consolidation, and price is now back above that very next day. It brings very short-term swings. So this is mostly short-term swing top or a short-term swing bottom, and then you can expect some immediate correction. So probably you have to wait for most of such neutral day is followed by a balancing.
So neutral extreme day, it has to break both the IBs, right?
Yeah, IB has to break on both the sides.
But yeah, what you have shown, it broke only one side, sir.
No, it broken. It's a failed auction also. See that. It broken on the upper side also. It broken on the downside also.
Oh, okay. Okay, sir.
That is why it is a failed auction. Still, that is a reference, but it is a neutral extreme down day. Right. So price closes the day's extreme low, and it was a balance. And again, price went back. So one of the signs that inventory is getting short to too short. Price went up, and that short-term price action you will be able to calibrate it.
Where is our entry, sir? If this happens, this scenario.
So it depends upon the other surrounding market situations. It is always not, you cannot go only by with this rule. So we need to confirm with other surrounding factors. The other surrounding factors is price is breaking the balance. Look into this particular day. There was a balance which we talked about over here in this band. In this band there was a balance. Price was breaking down below this balance, but it is not a greater one. So that is itself an one clue that it requires a follow through. The follow through never came on second day. In fact, it got back into the balance. So price have a reason to mean revert back. So that kind of thing you need to. It comes with the surrounding factors. So what kind of surrounding factors are there? You have to assess that thing, right? So not every neutral extreme down you have to go and play it. Maybe if this extreme is even more coming even more elongated, I would have been said that markets are will continue further down. Right? So that doesn't happen here, and so that we say like this is a weaker auction. This is a weaker auction, by the way. Whatever happened over here, it's a weaker auction. And right now, whatever it happened, also it's a weaker auction because it broke on the multi-day high. Lately, it broke on the multi-day high. So some 10 days of low would have been broken down by just lately prices coming in breaking down, which is not a good sign. It's not a high confidence breakdown. It is not a high confidence breakdown. So such breakdown requires follow through. No follow through, we will be straight away back to 10,950 levels. Okay, neutral extreme day. Extreme. It should come at a major swing top or an otherwise it also be combined with need to look into surrounding factors, something like let's say an AB poor low. So some other information, surrounding factors, mostly weaker references or weaker auctions to confirm the potential short-term
connection loss.
Right, so these things has to be confirmed from the surrounding factors. It can be AB poor lows or AB poor low plus weaker low, some psychological reference or some weaker reference. a lot of weaker reference combinations, and then you're seeing a neutral day extreme finally are one of the place where you can say like inventory is getting long to too long, which usually have to confirm with some other surrounding factors, right? Not every neutral day extreme is a market top. Neutral day extreme happens everywhere. It happens at the swing top also. It happens during the middle of the trend also. So it always combinations of how a market is getting topped out. For example, a neutral day extreme which happened in S Bank. If you remember S Bank, we said like it could be a potential top. The one which happened over here, it's a neutral extreme day, right? It's coming at a major swing high, and then we said like one more balancing, and then they keep going down. Right? So that's the same scenario which happened. There was neutral day extreme. There was one more swing top. I mean, there was one more balancing activity at the swing levels, at the spike base levels, and now this has more odds of going down because you see a lot of double mechanical reference, triple mechanical reference. There is one more G2 low formation on last Friday. So this T plus 2, it has the odds of coming down to 190 levels, and more reference level here. One more mechanical reference over here. Lot of you can see a lot of swing lows are getting crowded at 186 levels. And more activities happen over here. A lot of stops are down below 185 levels. Right? So you can expect some serious breakdown in S Bank. That top setup is here. That top setup. So we are already anticipated one top setup here because of this ABC elongation. It just given a short-term trend reversal. And there is one more short-term trend reversal. It's making over here with this kind of a setup. So surrounding factors are seeing that a lot of weaker auctions on the downside, and all of a sudden price is shooting up with a neutral extreme. And this is also a scene of crime, something like which happened in Sun Pharma. The news took the price to just a 1 hour price was at 15% upside. It's kind of it's kind of an inventory getting long to too long, right? So maybe laggards might come and play here, and they may end up getting trapped. Okay, that is one example. So always the surrounding auctions here are a lot of weaker reference levels are there on the downside. It's not just one levels, multiple levels got off base at 10,086 levels. If you look only from the price perspective, price might look like a strength. But if you look, let's say you want to look from the candlestick perspective, you might not find a top at all. Right, so you don't find any weakness there at least, but it is at a major swing high. It also broken a multi-month high as well. It got back into the multi-month high. In fact, November month has been broken out. November, December, so 2-month high has been broken, and it got back into the range. Right, so that is not a good sign. If it was a good serious buyers, they would have been broken. Once they're broken, they would have been able to stay away above that November month high. So November month high is not able to penetrate. So still that acts like a potential resistance zone, right? So an inventory, from the inventory perspective, one of the place where again one more time inventory is getting long too long. So any serious corrections, a lot of stops are there. So this is the zone where usually a stop hunting could take place here. A lot of stops got built around this zone. You can see the amount of activity which happened around those levels. More mechanical activity happened on those levels. More short-term buying would have been happened over there. So when that level is going to trigger, it triggers a lot of liquidity on the downside. So this is also kind of an excess. You can see an excess here. That excess came at a multi-month high. This is how an excess looks like. It's an excess. What happened on last Friday is an excess. It's a nice clean excess, which also come at a multi-month high, which favors a short-term reversal. Right? So a swing reversal is what we need to check out over here. And what else? Yeah, That's the context we are talking about. It's always surrounded with this other context as well, surrounding information. Otherwise, don't try to trade every neutral extreme. Every neutral extreme is not a market top or a market bottom. Okay. Now the 14th one is, we talked about exponential poor high or exponential poor lows. P-shaped profile at a major swing high. And this is also one more interesting trade setup, which brings short-term mean reversion. Yeah. So it's a short-term price action, short-term price action reversal, price action. Usually bring short-term reversal, short-term reversal. The recent example is from the Nifty. We have a Nifty chart here. So one of the day we got this major swing high. Price was breaking January high, and it forms a P-shaped profile. And then price tend to go down. So far they're down up to 10,070 levels, and it's a short-term swing you can anticipate. Price started accepting down below this reference, right? And that is it's like price was going up. You have a P-shape at the swing high, and the price immediately the very next day itself start accepting down below that. No serious business, so a lot of liquidation happens. And then in a worst case they might go and take this P-shaped profile. This may happen or may not happen, but a P-shaped profile at a major market swing high, right? And it price acceptance, it gives an immediate short-term downtrend, right? So something like that. So the same thing is there with Bank Nifty as well. So if you look into the Bank Nifty, the swing high, one of the swing high which forms is the swing high is one of the major potential top. And from there you got, and what you got is some liquidation. We got from 4 days from there. So far we got an straight liquidation so far. So, but most of the P-shaped profile also have the odds of coming and revisiting back. We never know how much days it's going to take, but definitely this is a back-to-back G2 high. This is not a swing high at all. All this is having all the odds to getting cleared. So all the odds to getting and revisiting over those levels in a very short term. So that's why I said it's short term, not necessarily immediately, but it is a short term reference. So maybe before budget, we might be hitting one more high in Bank Nifty before taking some major direction. And so P-shaped profile at a major swing high, that is a more key reference level for a very short term price action to anticipate. It's such a short term trend reversal. And the last and final one is where one more final setup. It's called the dual momentum setup, which we haven't discussed in the past, but it's one of the new pattern which I've been observing for quite some time, and finally able to get this. Like, it's a dual momentum pattern. So what would have been happened over here is it's kind of a top setup or a bottom setup. You can expect two ways a dual momentum can happen. So one of the way I'm going to explain here, like it becomes something like this. If you look at the profile, let's say we got a major swing high, and one of the day letter A is the top and price used to come down. It does like this. Letter A was the high, and one more day, either continuously or let's say one more inside bar, one more day nothing happened, one of the total balancing activity. One more day it got an letter A period. There are two continuous A period, kind of a back-to-back secure high, but both the letters are made only at the A period. Both are made at A period, right? So that is one of the way where it brings an back-to-back. It's kind of a back-to-back secure high. So both are at, I say like dual momentum because both are forming a top at the A period itself. So First half an hour itself, the day top is done, and that both are coming at a major swing high. The first letter A is the higher high. It forms a higher high, HH. And the second letter A forms a higher low, higher low, higher low. And so that acts like a potential market top or a potential market bottom also. In case of market bottoms, market will be going down. And one of the day, price tend to do an A shape, letter A, it forms a top. And in fact, even it could form a P-shaped profile. And again, next day, price used to tend to come down, but still market rallies, and still the letter A was the bottom. So it brings a more decent swing reversal on the upper side. So that's why we call that as a dual momentum. So dual momentum, letter A and letter A, but it forms a higher high, higher low on the upper side. Whereas on the downside, it forms a lower low and lower high on the downside. That is again in one form of a potential market bottom with a dual momentum. That zone acts like a strong support or a resistance, which is, we can call it as a back-to-back secure high, again, one form of back-to-back secure high. And at times the letter A, the second letter A, so maybe I'll give you one more example here. Price used to come down, and one of the day we got an gap down, and it formed some sort of an activity. Again, price comes down. It was at letter A, and the market was doing some balancing activity. One another day we opened gap down, and we done a reversal where the point of control got migrated. Initially, the point of control would have been here, but lately, as the price keeps moving up, point of control migrated over here, and then price migrated over here. It is an ORR as well. It's an ORR where the point of control got migrated. It is an ORR, and it also letter A. This zone will act like a crucial support zone. It acts like a support, and from there, we can say like it's a market potential bottom has been made. So now market could do some sort of a rally from there on. So the back-to-back secure lows. So at time it comes as an ORR. We can't. If this ORR is a stronger ORR, then that is even more subtle confirmation that this market has been bottomed out, right? So that's what the dual momentum, where it's kind of an short, it's a medium-term price action. Medium-term price action where back-to-back momentum days are made, or two short-term swing lows. Only swing lows are highs, which happens only at A period, right? And the rest of the day market trends in a reverse direction. Then you can call that as a dual momentum days. So that is how the so far whatever the top or bottom formation we observed. It's one of the classical example. Dual momentum is like the recent example from the I think from the ICICI Bank. ICICI Bank, it had one of the days its dual momentum highs. You can see that. So example, back to back, letter A was the high here. One of the major swing high, letter A was the high, and again one more A was the high. So both levels are still till today it's acting like a resistance, and we came exactly to that level, but still the sell-off so far was closely more than 10%, right? So more than 30 points has been done now. So closely and 7, 8 or 9% crash in this account in ICICI Bank. So that is how the critical impact is that. But still, it went a lot of sideways to take a fall, final fall. Most of the last trading activity happens only in the last 3 trading sessions, right? So otherwise, price was relatively trading close to that sideways. It went on sideways for more than 10 plus trading days, and more trading activity happens in the last 3 trading sessions. 3 to 5 trading sessions is what most of the price action happened. And otherwise, it used to do a lot of sideways action before falling down. But yes, it is one place where you can expect a dual momentum coming at a major swing high. One have to be relatively careful about this price action. It is a potential trend reversal, right? Any questions on this? I'm going to save the sheet and I'm going to share it to you once this session is about to get over.
Sir, in the dual momentum, you forgot to write period A.
I think okay, A period. Thank you. So similar confirmation I already taken from US markets, and then a similar confirmation I observed in a couple of stocks. Then only we are confirming these kinds of patterns. It has been seen in multiple market tops. Every time when the market is topping out or bottoming out, we try to study how the market top is getting formed. So each and every places we try to analyze what kind of a market could top out or bottom out. So all these are readings from the past experience, right? So maybe more patterns if we're going to see, we're going to write it out. But all these are how we take a lot of case studies and then we go back and analyze and check how our market top has been topped out or bottomed out. Initially, we have only 6, then it goes to 8, and it goes to 10. Now we are having closely 15 patterns, which has a high probability short-term or a medium-term or a long-term trend reversals. If you see all the older trades, you'll be seeing only a few patterns there. Mostly the back-to-back priming point of control, 45-degree line, and 5-day rally high, and open rejection reverse, and something like an 4-day balance, and something like an exponential pour lows, pour high, stop balance skip, and neutral extreme. These are the things you might find some 7 to 8 setups. Later we add on this G2 and back-to-back secure high, and we add on P-shape profile, and now we add on this dual momentum patterns and the ABC outside bar. ABC outside bar and dual momentum pattern are the newest addition for this 2.0 version. Right, I'm gonna share this. Let's see, it is closely 15 setups. So any questions? Otherwise, we are done for the session. You can get back by 2 o'clock. We will discuss more about reference levels, how to play with the reference level. Maybe this will give you end-to-end clarity about how to treat reference levels. And we are going to take a lot of case studies. Maybe we will look into even more stocks in the afternoon session. We'll look into more case studies, something like Reliance or something like Z Limited. Z Limited had a crash last Friday. So what kind of, why it happened, or do we have any subtle clues from there? Anything we can grasp from those things? What kind of auction happened? We'll discuss about Z Limited over there. So because the Z crash was quite significant, and it almost broken multi-year lows. In fact, it's not multi-month low. It broken multi-year lows. So it broken 2015 low, in fact. So how we can read this information? All in a sudden price was breaking multi-year low, right? So it broken 2016 low, 2015 low in one shot. So that means we are at multi-year low breakout. So what is the consequence of a multi-year low breakout? Those kinds of studies we want to do that. And is it a strong downtrend, or what does that really means, and how we can handle it? Is that a scene of crime or not? So those kinds of study we are going to do in the afternoon session as well. So we're going to take a lot of case studies, and we are going to look into gaps. So far, we missed exclusively talking about gaps. So gaps is one of the primary session which we are going to talk about. We're going to talk about daily gaps and weekly gaps. So let's talk about those things in the afternoon session, right? So if you have any questions, I can answer it. Otherwise, we can meet again around exactly at 2 o'clock.
Sir, I have a quick question here. So on this quick drop down, how the buyers will treat what to say how the if they are not keeping their stop losses, how they will handle or manage their positions here.
They cannot manage their positions. No, how if they are not keeping the stop loss, they can manage
That's
only
okay.
if they are buying puts. If they are
Okay.
already having a puts, they might be hedged. So let's say I bought on 400 put that particular day, or I would have bought some 410 put which was cheaper. In that case, risk can be managed without a stop loss also.
Okay, without the hedging, it's done, right?
With hedging, it can be done. With hedging, you can manage your risk. Without
Okay.
keeping a stop, still you can manage your positions.
Okay.
And without hedging, you cannot manage. Without hedging, you need to keep a stop loss. If you don't want to hedge it, you have to go with the stop loss only.
Okay.
Any other questions? Again, Dish TV, similar setup. Dish TV was at all-time low. Dish TV. Again, it is at multi-year lows again.
Sir, is there any tool you are identifying this stock, Dish TV, ZTV? How you will come to know, sir?
You will never come to know that. How do you know that the news is going to happen? Maybe let's look into market profile perspective, or we get something different.
Is there any scanner? It will show 10-20% down in a day. After that, you will see something like that. So.
Maybe intraday scanners you can run. You can create in ME broker, or maybe let's look into that. Whether it's an ABC pattern or ABC outside bar. What kind of pattern it happened? Why it triggered? That's what we're going to study about it. Are there any clues we are able to get in beforehand? Right? What kind of clues we might got that this is a strong auction? We should not fight against those auctions. So that's the thing we are going to study about it. It's a case study, right? So I'm not going to say that you can predict this kind of movements, but let's go and study how we could know that it is a strong auction. Are there any clues from the market profile that this is a strong auction, that you should not fight with a trend, something like that? Right. So let's go back and do that. And again, we'll catch up by 2 o'clock. We'll take this Dish TV and Z Limited as a case study, and then we'll try to understand how the auction evolved in the start, and then what are the other surrounding factors in the past, what triggered this move, and who's responsible for this move. Is this a strong auction or a weaker auction? Just we'll go back and study, right?